Good morning. I'll read each topic as a short, listener friendly summary, keeping the original details and figures intact. Topic 1: Iran related geopolitical tensions, driving markets and security risks. Background: U.S. and Israeli strikes on Iran and Iran's retaliatory steps, including threats to close the Strait of Hormuz and attacks on energy and communications facilities, have sharply raised geopolitical tensions and are directly stressing financial markets, energy supplies, and technology infrastructure. Market moves. Spot gold surged to 428,000 odds, a session high since March 19, and U.S. gold futures rose about 1.3 to 1.7%. The dollar weakened and boosted demand for gold. 10-year Treasury yields hovered around 4.31%, with markets cautious. Equities had short-lived rallies amid heightened volatility as optimism repeatedly reversed. Energy and LNG. Brent oil jumped into the $100 from pre-conflict levels near 70, rekindling inflation fears and raising fuel costs for consumers. LNG spot and contract prices in Asia spiked, some markets roughly doubling amid Strait of Hormuz and Qatar export risks, benefiting non-Middle East suppliers while forcing long-term supply reconfiguration. Tech infrastructure threats and implications. Iran's IRGC publicly listed about 18 U.S. linked tech targets, including NVIDIA, Apple, Microsoft, Google, Intel, Cisco, Oracle, IBM, Palantir, Amazon, AWS, as legitimate targets with a threatened start date of April 1st, Tehran time. Data centers, cloud, telecom, and AI infrastructure are at risk after an AWS Middle East data center attack in early March, prompting tech firms to bolster staff safety and contingency plans and raising systemic cyber-physical supply chain concerns for global services and policy responses. Topic 2: Market volatility and capital markets activity, index and sector performance. In March, S&P 500 fell 5.9% and Nasdaq fell 0.75%. For Q1, the S&P 500 was down at 4.6% and the Nasdaq about 7.1%, the worst quarter since 2022, with late-month rebounds insufficient to erase sizable drawdowns from January peaks. Oil and cost shocks. Geopolitical conflict and an effective Strait of Hormuz squeeze sent Brent up roughly 64% in March, and WTI about 50% month over month. Amplifying fuel and input cost pressures, retail gasoline averaged around $4 gal, and 4-week prices rose roughly 34 cents, which weigh on corporate margins and valuations. Corporate earnings and tech stress. Microsoft suffered its worst quarter since 2008, with shares down about 23% in Q1, amid AI infrastructure and data center cost concerns, weak Copilot adoption, commercial license take rates near 3%, and fierce AI competition, even as Azure growth remains a support. Deal activity and IPOs. Global Q1 M&A totaled about $1.2 trillion with fewer deals but much larger average transaction sizes and roughly 22 deals above $10 billion. SpaceX is assembling a 21-bank syndicate for a large IPO, Project Apex, at an estimated $1.75 trillion valuation targeting a June window, showing sustained appetite for mega deals despite market volatility. Topic 3: AI and technology-driven labor and corporate shifts, investment versus job cuts. Big tech is pouring hundreds of billions into AI infrastructure, data centers, GPUs, while many firms simultaneously execute large layoffs. Although companies link cuts to AI transformation, other drivers such as post-pandemic overhiring, higher rates, inflation, and debt burdens remain central. Labor impact and skills. Evidence that AI has already removed large numbers of jobs is limited. LinkedIn CEO highlights 5 human skills AI can't replace: curiosity, courage, creativity, compassion, communication, and urges individuals and organizations to cultivate these 5 C's to remain competitive. Corporate moves. Oracle reportedly cut thousands of jobs amid heavy AI capital spending and planned debt raises. Reports of large financing needs tied to data center builds and major contracts. Visa launched 6 AI dispute resolution tools, 3 for merchants and 3 for issuers,